What happened over the weekend? The market saw a major sell-off. Over $1.7 billion in crypto derivatives positions were liquidated. Long positions especially took a hit. Bitcoin dropped as much as 3%, slipping below $113,000 before some partial recovery. Ethereum fell harder, down 9%, dipping toward $4,000 before bouncing back closer to $4,200. Altcoins were not spared. XRP, Solana, Dogecoin saw steeper losses, many breaking support zones. Why the drop happened? Over-leveraged market and liquidations. When many players are in long positions, expecting prices to go up, even a relatively small downward move can trigger liquidations. Those forced sales often cascade, pushing prices. Fading optimism post-rate cuts. Investors were hyped by the Fed's rate cut, expecting sustained easing. But the Fed also signaled caution, suggesting future cuts might depend heavily on how the economic data evolves. That tempered some of the bullish momentum. Rising bond yields and macro headwinds. U.S. bond yields, especially short-term, remain important because they set opportunity costs. If yields on treasuries or other safe assets are high, that can draw capital away from risk assets like crypto. Also, inflation concerns, recession fears, and uncertainty in macroeconomic data are spooking some investors. Profit-taking. After recent gains, some coins had run up. Traders are locking in profits. When big holders start to pull back or take gains, that adds downward pressure. What this means for investors and traders. If you're holding, this may be a time to be cautious. Watch your risk exposure, manage leverage, avoid overcommitting in altcoins until clearer signs of strength appear. For swing traders, these dips may offer buy zones, especially around strong support, but only if you have a clear stop loss in place. For long-term holders, if you believe in the fundamentals, regulation getting clearer, continued institutional interest, etc., this pullback could be a healthy reset.